Guys, this is yet another session where I'll be putting us through on how to set up your Fibonacci retracement tool as one of the important tools which you use to find your entries. It also helps you to analyze the market clearly. It helps you have a better mental framework of what the market is likely to do, what you should be expecting from every move of the market. Now, when you want to pick for those who already have Fibonacci retracement tool as part of their favorite tools on the desktop app, which may not always give you that functionality on the web version. So when you're on the web version, whether you have it on your list of favorite icons or the tools you frequently use, or you're on the web version, when you come to use the left icons by the left hand side of your screen, the list of icons that are there, when you tap on them, you see the third one, long press it, and then you see a list of icons, tools that are there. So what we want to do here is to use the Fibonacci retracement tool. Even though I've already have it, I've made it here as my favorite, so it's easy for me to just pick it up without going through this process. But then regardless, here we are on the Fibonacci retracement tool. So you draw a Fibonacci retracement tool. You can see there are a lot of zones right here. So what we'll be doing right now is to filter them, leaving the most important ones. And then to do that, having created the tool, drawn the tool, come to the settings icon here, tap on it, and you have a whole lot of zones here to work with. Choose the ones you will be using and those that are really not relevant to you. So which is what we'll be doing right here. We'll be unchecking the zones we will not use. Starting from this, we have 4.764 zone. We don't need it. So I will just remove all of the zones here, leaving a very few among them. 3.0 zone, we don't need them. 1.6, 1.4 zone is not needed. Let me just quickly uncheck all the zones we don't need. We'll be leaving just the 0 zone, 0.382, 0.618, and the 0.5. 0.7 will be unchecked. 0.168 if you want to, but then for now we won't check it. And then we'll also uncheck the 2.4 point zones. So as you can see, we have the beginner zone, which is the 0, the 0.382, 0.618. The 0.36 is also not really needed. We also uncheck it. And then we are left with 0.5, 3.2. And then when you scroll down again, you see this feature here. We need the price. We don't need it as uncheck this reversal point. You don't need the price. We already have the price on the chart, so you uncheck. And what else again? It's on percentage, right? Yes, we leave it that way on percentage. Where do you want your Fibonacci levels to appear? Use this this drop down arrow here and choose wherever it is you want them to appear. For now, we'll leave it at the right hand side. You might want to shift it to the left to click the left option here, and you're good. How visible, how thick you want your lines to be, you can choose from here. For now, this level at which it is here is fine. Visibility, what do you want to appear on the chart? The tick should be there, volume should be there, and then you can also play with the zones. That's the colors you want. Now when this is black, right? This the 0 level here is black. You can always change the level, the color, tweak it to your preference. They are all black here. No, it shouldn't be. Let me make this one a bit brighter. Let me see something like this is fair. And then you see the 0.618 is a golden zone. I want to see it on green. I want to see it on green. It's a really strong zone for me. The 0.5, which is the 50.0 zone, It's also a major zone for me. The market comes there, it draws my attention, so I want it red, which I think I should get a fire bridge color here. Okay, I'll go with this and then just drop it down with it. That's for the lines. That's how I want them to be. And then let's see how the background looks like. Let me just increase them a little bit faint. I think I'm okay with the way they are. The other settings we've not touched. The font size, you might want to increase it. I have 20 here. Okay, let me make it 22 so that the text might be a bit bold. You can always change and check, use whatever it is you want. What should be the color on the trend line? I need the trend line to be a bit thicker. This already, you can faint it and make it much thicker. So we agree with what we have, so we hit OK. And here we are with our Fibonacci retracement tool. Fully drag it down and you see the zones, you see the lines, the price levels. We have 50.0, the percentage, 2%, and all of that. Do I need that? Well, you can always tweak that. The levels are okay. Middle, right. Yeah, all on the right hand side. What do I have here? I think that's fine. All right, just hit OK. And now here we go on the Fibonacci levels. Now these are the lines. This is the Fibonacci tool. But then moving forward, how do we draw a Fibonacci retracement tool? I'll be deleting it and I'll pick it up again. When you pick your Fibonacci level as discussed in the video I sent earlier, what you want to look at is the zone from the low, the recent low you identified, to the recent high where the market gained a rejection and pull back from, right? But then the best way to go around it is to identify, identify the low, and then the low responsible for the current height the market got to and then it started pulling back, or the current price the market got to and then we had the rejection and the market started falling down. What you want to do is to pick your Fibonacci. Having picked the tool down, bring your pointer to the very point where you want to start drawing from. Considering, let's take this level right here. So I said in the video, the point at which you want to pick, the best place to pick your Fibonacci levels is to identify the wick of the lowest candlestick from where the market gained the support and started pulling upwards. Identify the wick of the lowest candlestick. If you're doing wick, ensure even at the resistance level, the point where you want to drop your Fibonacci to, it should also be the wick of the highest candlestick. So what are we doing here? We are picking from the wick of the lowest candle to the wick of the highest candle. That is what you want to do. And then if you want to maintain body to body, it should be the body of the lowest candlestick to the body of the highest candlestick, the level at which the market got to, and then we got a rejection, right? That's what you want to do. So now when you pick your Fibonacci tool, bring your pointer to this level as we have right here. Then you draw, just left click, hold it down, and then push it upward. Hold it down, push it upward as you can see. Now here we are on the wick of the highest candlestick. Candle that closed highest before the market gained the rejection and then the market started falling. Notice how that the market fell, oh sorry, Notice how that the market, when falling, it got to the 50.0, and then there was a support. The market gained the support and started pulling back up. If we are to scale down, let's scroll down again and pick another level. Okay, we have this level here too. All right, let's pick the Fib level again, Fibonacci tool again. And then this is the wick of the lowest candlestick from which the market gained support and started reversing back up. I'll pull it up and I drag it to the very point where the market gained rejection and started falling, which is this zone right here. That's the zone. Notice the repetition of what has happened from the previous one we drew. The market got to this zone. Let me use this to right here. The market started from here, got to this height. We had this height broken. The market got to this point, and then there was a rejection. It got rejected, and then it pulled back. It pulled back down to this zone. Where did it fall back to? It got to the 50.0 level. And when it got to the 50.0 level, what did they see? It gave us a reaction, which led to a support, and then the market continued going back up. Notice how the market went this high, broke this high. There was a little pullback here, which should be around the 38.2 level. Not regardless, but then because the market then returned back to where they gained the support and started pulling back up, and then we have this movement up onto this level. And then the market pulled back to this point again, and then it continued moving. Are we together? Now imagine you were to find an entry on this system. What are you looking at for? You notice the market started pulling back. Where is your possible place of entry? The moment the market starts pulling back, there's a rejection in the market and the market starts falling. The question is, yes, the market is a buy, but you necessarily don't want to jump into the market at any point. No. The market will buy, even though the overall of it is a buy, obviously a yes. You jump in for a buy and the market still kicks you out. Why? You didn't enter the right place, right? Now, how do you identify the right spot? Is what Fibonacci Retracement Tool is telling you. So what you want to do is the moment you notice the market start pulling, the market started rejecting, pick your Fibonacci Retracement Tool and identify the level at which the market gained support and started pulling to that height. When you pick it, drag it to the point where the market started falling from. Now, map out the zones. As you can see, we drew it from here to the height where the market gained rejection and started falling. Chances are high, 80% of the time, that the market will pull towards a 50.0 for a valid pullback. I said the 50.0 is an important zone. That's why I drew how to color mine here red. It is an important zone in the market. Even though 61.8 it seems to be at a golden zone, when the market pulls back around there, the chances are high the market will definitely return back up. But oftentimes, you really don't always come around the 61.8 as often as it will come to the 50.0. So both zones, those two zones are so important whenever the market is pulling back among all the pairs in the Forex system. All right, so now we have to wait for this market to get to the 50.0. Obviously, as you can see, the market pulled back, it got to 50.0, it gained a support, and then it started pulling back up. As much as going back to break the rejection level it had before falling, broke it and continued going up. Assuming we miss that entry, we have another setup right here, where the market got to this point, broke that height, and then the market started falling. I also want to know, how do I join this trade? Fib should tell me what to do. The market pulled back to this zone. This is where the market was, right here. And then it started going back up. When the market went this high, and then the market started falling. What I want to do is as simple as waiting for what the market to do. Look at the movement of the market. The market got to this place, pulled back a little like this, and then it got to this height. And then the market got rejected because when it came to this zone, there was an attempt to go further, but it couldn't. It got rejected, giving us a double exhaustion at the top, right? But then the market started falling. But notice how this market fell and also came back to 50.0 zone. If I miss the entry earlier, I have another opportunity here. Just as simple as waiting for the 50.0 level for the market to tap and then give me a rejection and then started going back up. The moment I find my entry at this level, my stop loss should be where the low before that level, right? We have one level right here. As you can see, whatever it is that makes this market to break this rejection, the 50.0 zone, and falls back and gets this level broken and close below it, there's a change of character already happening there that will consider a sell, but not because it's becoming a sell or want to hop in. No, we still need to wait for that pullback to a previous rejection point that's likely to turn support, right? Or a previous support that's likely to turn a rejection, as spoken earlier, the swap zones. That's where you want to be on the lookout for. But then the market didn't do that. The market instead tapped on this